So trading gold really needs care, especially if you're going to be using a hedging strategy like the one we teach all our members across the board at the Trading Mentor. Typically, sizes are going to have to be lowered to cater for this sort of high yield, high variance, high risk asset. You don't really want to be going crazy with gold because as of late, you've seen it rally even in risk on as well as risk off. So there are some very, very key factors to note, but we're going to run through a simulation and I'm just going to show you how to exit every single market move and market cycle for net gains overall. Let's jump into it. So we can now cover a session on gold via the simulator using FX Tester 6 here again. Quite good for this kind of thing and reflects MT4 well. If you were using anything like TradingView to trade, obviously it's going to be the same price, but their replay trading is a bit lackluster and doesn't really do the job. So I'm going to jump into this and I will actually just skip ahead. I think a couple of years, that will just help us get a bit of price action under our belts. So we've got levels to react to and make decisions from. Remember, if you want to learn to trade for income, we're very consistent with our record. We take a high gains, low risk, consistent approach via hedging. It's a really, really exciting way to trade, and we've had great success with all our students on all kinds of tiers. So if you want to join, go underneath and we'll get you started. So if we jump into this, we can see we're now into February 2012. Market, slightly to the downside. You've got some lower highs along here and some lower lows along the bottom. Some reasonable pushes to the upside within that. Okay, you've got the market slowly falling. Now, this initial reaction you can see at the moment doesn't look extremely appetizing, and there is a bit of room until you get up to these areas of key resistance to more or less continue this downside movement. That's what I'm aiming for. The lower lows are a bit, underwhelming, let's say, but we've got room up here. Certainly, if we look at the daily, you can see a bit of rejection. So I think I will actually just enter. Remember, with assets like gold, to keep these videos as simple as I can, I use very, very low risk parameters. Of course, when you're on the inside with us, you can then change your sizes based on the amount of assets you've got and the equity you've got available. But to keep things really simple, we're going to say 0.03 is the highest risk I want to take, 0.02 is a medium risk, 0.01 is a low risk. Essentially, the probability of success on that trade is going to be graded to the size I'm taking. So for me, this is a mid-level, sort of mid-range entry. It's not the best. There's a bit of room, like I said, but it is a high-ish price and may come with a reasonable target for profit on a downfall. So I'm going to have a look at the weekly for any considerable levels on a swing basis that we may reach. I can see quite obviously nearer the line I've drawn, is going to be where we want to look to end up. If we don't get there and we push up into more key resistance, I'll just complete the max size. You've got to have limits when you're trading, absolutely. If you don't have them, you will struggle. So that was my exit on all of them. I missed it slightly on the second, but nonetheless, I can close out. And because the price is still high within this downside movement, I can take a very light long in case we get any initial rejection to the upside. If we don't get that, I will just add much lower down. Okay, so I'll add another 0.01 here. Okay, and hopefully we'll get into a hedging cycle and take some hedging opportunities. That's only really going to come if we get a reasonable fall to the downside, for example, now, or vice versa, depending on what way we enter the market. So I can kill that long, and I can continue this downside trajectory. My 0.02 I just took is going to hedge, over hedge more or less that 0.01, just because of the stage of the market. But I'm going to take that for early gains. And just because we're seeing downside movement now, I'm going to kill off that other one. So we're net 140. That short I just took to offset, part of the hedge, part of the long I formerly took, has paid for that loss. Okay, so instead of using a stop loss and being closed out, I just use the gains I've made. And that is the premise overall for hedging. I can see the push up is weak. I can see you're coming straight back to this price action level. So I'd be happy to take a mid-level short again and exit for gains. Now, someone commented on another video saying, wow, these are random exits. They're not. If you traded markets for a very long time, and you sit on the professional level, you can see with the naked eye that this is a level where I would rather not be short. Okay, it may be the case that you fall through here, but I know there's likely to be long side reaction. Okay, just because it's probable doesn't mean it's certain. And should we fall lower, again, I've got the means to exit and hedge out for gains. Now, similarly, any push to the upside closer to here is going to warrant an exit. Now, you're hitting very early minor resistance. You can see that across the board. So I'm just going to kill that and just exit. And I'm just going to add a 0.01 now short because of the weakness of the market. So it had a light bounce, and I'll add another one up here. So I'm spreading my risk slightly. A big mistake a lot of traders make, is they put everything on the table straight away. They get long, to the heavens as quickly as they can, and it's just not ideal. You don't need to do that. Taking lots of small gains is fine. Taking small risks is also fine. If the market swings against me rapidly now, it's not going to be a problem. It's likely I'm still going to be in positive equity because I've taken a good lot of gains already. So having a really high hit rate certainly helps with, what we're looking to do here. And I'm just going to kill that long again. And I'm just going to take a light short. Okay. And I'm going to kill that again. And you can see the market now is just going sideways. Again, it's going to give my hit rate time to shine. If we fall lower, I can add again because we're now at a key technical level. Okay, you can see that there. And there's a bit beyond that where I will add for a third time. Okay, now typically I'm going to be spreading my longs out and my shorts similarly over a certain period. I can now see there's a good chance we may continue lower because we've got our downtrend. Price looks a little bit weak. I'm going to add a hedge short in case, and I'm going to close out this long. So I'm going to tighten up where we are. Okay, so any real push lower, I am playing it a little bit fast just to speed things up. Again, because of this downtrend and the need for me to trade a tight cycle on riskier assets like gold, I've accidentally closed the short. I wanted the long out. Okay, we got rid of both and we're still in gains. But now, I can look to add something again. Okay, a bit of a fall there, a bit too fast. It's just for the purpose of the video. I don't want everyone sitting here for absolutely ages, so I speed it up a little bit. Price looks a bit supported. No, we'll kill that for gains. Now it looks like we want some rejection, most probably. You've got some levels here. There's a minor long side bounce coming up. And that's why I swapped time frame. So you can see where I've drawn my line, we're coming to, early sort of resistance. Price is weak and subdued. So I'm going to close that. Now I'm now up $364. Of course, like I said, if you're trading much larger size, which you could if you had the appropriate arrangement, obviously your gains would be larger, but it is up to you. But I certainly wouldn't do it unless you've got concrete risk plans, which of course is what we provide at the Trading Mentor, as well as assistance in your portfolio growth, which is going to be based on those risk plans as a whole. So I can kill that again. Pretty high hit rate here now being displayed. Price really is channeling between the lines I've labeled for you. And the thing is as well, level spotting in financial markets is absolutely key. If you can't see where the ranges are, you're really going to struggle because markets, believe it or not, move on ranges. Okay, they're range-based entities. Traders decide what is a good and what is a bad price based on the boundaries, essentially. So within this time frame, if you put your time frames down, you can see that the best price to liquidate your longs and get short is up here, i.e. where traders want to get rid of expense. And, underneath would be where they want to get a good deal and they'll take it long. Everything in markets is purely based on a time horizon, and those time horizons operate within the realms of ranges, like I said. So I want to start to look short here now with a 0.01. Instead of diving in with my whole entry early, I'm spreading out. and then slightly higher I will add again if we can get that price. If we can't, I probably could have hedged there. I'm just going to take another short. Okay, and a bigger dip, and I'm going to hedge long. So I don't want to add any more short exposure yet. I might if we get a bit higher. Okay, we're going to add a 0.01 there. Any bigger dip, I'm going to hedge long. Okay, so I'm going to take one long hedge there. And even if the gains are minor, I can still do what I can. Don't really want to hedge unless we get a larger push down. But I am going to add a short there. And I'm going to exit that for a minor loss, that former long. And then on a larger fall, I can look at taking a hedge long, like that. So I'll kill this. Again, they are minor gains, but more or less I'm just trying to remove the exposure a little bit, just in case we go much higher. Obviously, we would continuously hedge to escape that. So now we're down on that former long $55, but we took some short gains there, which will offset some of that. We can take a bit more to the short side, and now we've got net longs higher. The market looks weak, so I'm going to kill that one. And at this point, we're left with a little bit more room for shorts, but still a long to the upside left. Okay, so that's a decent move down. And I can now consider, because the price is still relatively high, I'm going to consider a lighter long. And I'm going to kill that slightly earlier. And now I'm going to use the gains taken on both to remove that. And I'm going to hedge again. I'm going to take a normal long. Well, a normal light long. Sorry, short. I'm going to add another light short. So I've got 0.03 in play now. I'm going to be out of this. And I'm going to hedge long. And I'm going to kill that short. And at this point, I'm $663 in gains. And it's nice and easy. And I'll add short again. Hopefully, we'll be able to exit this whole cycle in a second. So if I want to now, I can simply keep the process going and get long. Or I can kill this short and just be in net gains. So what I will do is I'll add a long. And we'll go a bit longer. I'll add another long here. I will keep that short just in case we fall, which we did. Close, and I'll add a long. And I will kill that long. I'll add a head short, just at these very low lows. I'll add another short. I will kill off that long. Okay, and now we're channeling sideways, so I'll leave the other long. Okay, I'll add another one. And I know I've got both open, but I will kill the short if it drops lower. It's a risk procedure. In fact, at this point, I will close those two. We're now even more in gains. I'll add a hedge long in case we fall back to those lows. Okay, and we are falling slightly. So I'll kill that. I will get long again. Okay, so now that would have been decent. Okay, so now alongside push, this might give us the opportunity to hedge out of these. Now you'll note as well that we've already taken considerable gains. So that means on any real push against us, we've already got gains banked to protect, but we can hedge as well as a means of collecting enough gains to sustain ourselves as the drop comes. So you're seeing early resistance here. Okay, I'll probably add another one short, about 1477 perhaps. and I'll consider my long options. I think I'll probably get long on a pullback further. So I either want it higher like that, slightly, and if it drops, I can hedge long. I can also decide, well, the market looks a bit radical on a fall. Do I want to consider exiting something early just in case? Okay, so I can make that decision now. I'm $191 down, but my long side exposure has significantly reduced. Okay, I've now only got shorts really in play, but I can exit this, can take that long. So the long I removed and took a loss on, I've basically replaced, where we are now, which is good because I can exit some more gains, which is going to help in our quest to recover those losses, essentially with the gains taken. Another drop there, very minor short side gains. Okay, but it does give us the means to hedge long again, exit again. Okay, market's still struggling a bit. Bit of a fall there, hedge long. Okay, so I can take $41 there, and it looks like price is very subdued. So I've got the choice really what I want to do with this. Do I want to exit this one with some of the gains taken? And because the market looks radical at this point, that's what I'm going to do. Okay, and then I'm going to look to take some hedge shorts against that former long. So now it looks like the market may climb, but in any case, I can kill this. And now you're starting to push lower. There you go. So we can have a look at higher time frame support. You can see we're getting somewhat of a market maker stop here as we drop under these lows. Okay, so I could consider my options long. Now we've got a very low price in the grand scheme at the moment, so I will take a larger 0.02. And now you can see a bit of drawdown building because our other former entries are much higher up. So any real retracement back up like this, and I'm going to look to the hedge short side, just in case we can continue our trajectory, much lower, perhaps $35 there. It's just shy of 10% of the overall drawdown. So I do that several times, and I'm well on my way to recovering what was lost. So we're now sitting at very early long-term resistance. Again, I've got the choice. Do I want to tighten up? Well, the retracement could be high to the upside potentially, so I can leave the long. And you can now see we're rallying to another layer of early resistance, typically around here. So what I will do is I will kill that, and I'm going to look to reshort lightly because the price is still relatively low. And any real push to the downside, okay, like that, okay, there you go, is going to be great. So I'm out for gains there. I can look to hedge long again. I've also got the choice, do I want to wash away some risk here? Now, I could, close that, for example, and then just re-add a long lower. So effectively, I've moved the long lower down, and I'm now net even on my exposure. Now, there's a good chance there's a bit of room to the upside there, but I'm just going to close that long. Okay, I would have probably enjoyed that short a bit earlier, but it's all right. And I can now take another short and hedge long on any radical falls. Okay, so I'm talking back dips here, level-based dips on our daily, which we're not getting yet. I could take a hedge long, just in case. There you go. Kill that. And then really anything much lower. Okay, so straight to that level-based support now. Kill that one. Kill that. And again, I could have exited the cycle short now if I want, just by killing off those entries. But I'll take hedge gains there, $32. Market looks subdued. Not the best long zones, but I will take a long. Again, if I want, I can just exit that long cycle. Okay, so that's enough of a push for me. I can add short again. And like I said, if it looks random to you, then you need training. For me and all of our pros and my code partner, my co-pilot, it's not random at all to us. So I can close that. And there you go. Another video where we're in net gains. Of course, like I said, if you just scaled the size, you'd make a lot more money, but you need to do so within your portfolio overall. So how other assets in your portfolio are going to affect that, and your equity available. You need exact rules for that. Most people just lose money trading because they have no rules, they don't understand risk, and they have no risk method. So if you want to learn, just jump underneath. We can teach you. We teach practically every day. We do an overview on a Monday of all markets, a review on a Friday, and then we put trade calls out and plans within the midweek. If you're interested in learning to trade for income professionally as a full-time job, then we also can teach you there. But just jump under this video and we'll get you started. Thanks for watching.